jobless claims came out today. The Fed keeps saying gaslighting. I know why they're cutting rates now, because I was kind of questioning myself why they're cutting rates, and the job market is not doing well. If the job market doesn't do well, what happens, right? Less tax receipts go into the Treasury, because half the Treasury's income, by the way, comes out of two things. Half of it comes from, obviously, W-2 taxes that, you get a paycheck, you get the deduction going. About 20% actually comes from corporate taxes. And the other half, the other 30%-ish comes from capital gains taxes. Okay, so if Jeff Bezos sells $5 billion worth of Amazon, which he did last month, he has to pay taxes on that. He has to pay like $1 billion in taxes. So that's where the money comes from. So markets staying high helps those tax receipts. So that's why, but the other reason Fed is cutting rates is they're seeing the jobless claims and they're seeing the unemployment numbers and they're not liking it. So they're trying to preempt a massive slowdown that's coming up, if not a recession. But job openings fell by 420,000 in September to 7.44 million, the lowest since 2021. As you guys can see, Kobesi Letter always backs up their claims by charts, and pictures are worth 1,000 words. Look at that chart. That trend is not good. That actually topped early 2021, right after the pandemic, and then that number is going down. So that's the jobless job openings, right? So less job openings, less opportunity for you if you get laid off. Now, if we go in a slowdown or a recession, U.S. available job vacancies significantly missed expectations of 8 million. They did, and today's numbers, did as well. Look, unemployment is going to be something we all have to deal with. If you do have a W-2, make sure your ducks are lined up. You have some rainy day funds, because what the W-2 of 20 years ago is not the W-2 today. So, and the data has not been revised downward in 15 out of the last 20 months, the highest frequency in the last 15 years. So jobless claims keeps going lower, and the unemployment number, as you guys know, the way they gaslight is they bring out a number and next month they go revise it down. We had a massive unemployment revision a couple of months ago that I talked about. They literally miscounted 800,000 people. I go like, how do you miscount 800,000 people when it comes to unemployment, right? Well, they do it because they need to keep just pump going, right? And they gaslight, and then they say, oh yeah, we need to revise. And then, all of you, by the way, should be familiar with FRED. FRED is a person's name, obviously, but it's an acronym for Federal Reserve Economic Data. If you Google FRED, you will see all these things, all this data, economic data that they bring out, right? The St. Louis Fed, New York Fed, Cleveland Fed, they're all there. All the region's economic data is public view, public information. There's nothing to be hidden there. So go visit FRED. Start making, get a clue of what's happening in the economy, and it could be in your area, right? So because the economy in the West Coast is not the same economy as in the middle of the country or the East Coast. So, go visit that site. It's called FRED, F-R-E-D, Federal Reserve Economic Data. But the job numbers are not looking good, and that's one of the reasons Fed is cutting rates. They're foreseeing some things that they may like. But as the Kobesi letter says, the U.S. labor market is deteriorating. I agree, 100%. So that's deteriorating, right? What else is deteriorating? Inflation is not going anywhere. This week, PCE numbers came out where Fed watches PCE more than the CPI. Those are not good either. Those are not coming down. So Fed is cutting rates while the inflation is kind of persisting, okay? And if you look at all the asset classes, they're just telling you the completely different story, right? All asset classes are at all-time highs, from stocks to gold to silver to Bitcoin. The only thing that's not doing that is oil. Oil is actually going lower. So oil going lower is also a bad sign. Oil is a good predictor of the economic strength, right? So that's also a bad sign. We have like a Middle East war, potentially. Oil's going down. Why? Because demand is not going to be there if an economy slows down. So there are a lot of tea leaves for you guys to read. I'm going to read them for you, explaining to my best of my ability, but you guys should start paying attention to what's going on.